Well, good afternoon, everyone. Hey, it is Shooter Scott Henderson. Of course, at the end of our presentation, please do review our disclosure. All right, let's just jump right into this. What do I see? What everyone wants to know. Okay, we're range bound. We need an event catalyst to get us out of it. We're looking at a 1 hour chart in QQQ. So note this gap. We got into the gap and rejected a little over half. That to me implies it's really weak. We've gone back up and retested that. Right? Put in a lower high, and we've gone in and retested it again today and put in another lower high. And we have this huge gap here. What I don't like about this is the expanding gap. So we had gap one, gap two. So it's a shot we get a third gap. Couple things. First of all, there has been a block on share buybacks because of earnings. That could very well be what we've seen in the gaps this morning and etc. Because typically that occurs, and realize it can occur, well, I don't know specifically. I know it's at least 15 minutes before the open and 15 minutes after the close. I probably should look that up so I know, but that can occur when the market's not open. So that could be why we've seen these two gaps, because all of a sudden, first of all, we had Netflix, who had a moratorium. Right? Then we had Tesla, which had a moratorium. And what did we get both days in a row? Gap and gap. So that could be what we see here. Right or wrong, it's just my 2 cents. When I see the move, I'm trying to, well, why is it doing that? Let me back up for a second. So I think we're range bound. We really don't get excited about the bulls until we're above this 540. Excuse me. Swallowed down the wrong way. All right, let's look at a weekly chart real quick on this. My main question, like I said this morning, question is, was this for it? Because we got this boom, and then we've not been able to take this out. We don't even look at the difference in the volume candle. So all of those positions could be closed. However, the Mag 7 doesn't apply to that. We look at the Mag 7, all my rules to get long. However, I'm hesitant. I really am hesitant getting long. I don't want to miss it. Reason is, what I really need is some divergence down here on the week. And then, even before that, I need some more divergence, because this is confirming. So even though this was drive one, RSI was more aggressive here. So I want just a little more lower low, somewhere around 399 or 394, just a little bit. Give me some confirmation. Give me a motive to jump on board and say, hey, like over here, we have a confirmed high, right? Conviction high, right? What is it? Third drive. Drive one, drive three. Conviction. Right? So when we get our 5, what do I have? I'm looking at least a 50% retrace off of this move. I have conviction in this spot. Conviction. Everything I do, conviction right there. Right? In this spot, we kind of have a confirming high. Right? This is sort of a double top. But we did eke in just a little high. That's what I mean. Sometimes you get this little bit. It's a smidgen. It's a line. It's not too much, but it's enough. It gets it done. Then what do we have? So we have a higher high in price and a lower high in RSI. So I have some conviction. I don't have conviction. Hopefully that explains it. So let me jump over and look at the SPY. Pretty much same thing. So we are looking at, let me go down to a 1 hour on this as well. Same exact look. I never like it when they're like blueprint. Copy. Fill the first gap. We did not get into the second gap. So we need to get above this 547.95. We could. I mean, fans are pumping. Everything's green. But my question is, why haven't we taken out these lower high? Lower high, right? Lower high, right? And we wicked above it, but we rejected it. Right there. Why haven't we taken? Because there's no conviction. So the euphoria is not there. Nobody's like, okay, yeah, let's jump on board. We're going to miss the boat. I think there's a lot of people sitting on the sideline. So, that's just my 2 cents. Now, I don't usually look at this, but we're going to look at it. We're going to look at SUC, because this is a great example. I'm on a 1 hour. Let me go up to a weekly. I don't think we have too much more on semi. However, what concerns me with the semis is what I see here. And this is really Dale's work and what he sees, RSI. We have a little different way of looking at things. But I respect his work, okay? I don't like that right there. That's one of his speed lines. Now, the other thing I see is we have a speed line here, right? Which we kind of haven't taken. That's in line with a push down to $2. But that's one hell of a move on semis to the downside. That's a hell of a move. So I don't think this is done. That's really what it comes down to. Because my argument here is, yeah, this was an ABC, right? But this doesn't look done to me. It's flagging, right? So I don't see this as an ABC. This is what an ABC would look. It could be an elongated, extended. I don't like that. I don't like tight AB because it didn't take it out. So equality, well, actually, no, I'm incorrect. So Equality is closer to $2 on a regular ABC. I didn't visually see that type of climb. Let me come in and just drop in. I'm not going to try to be too wordy. But what I'm doing is I'm fishing for why I like sex. That's what I'm just going to use it. So this is what it should be like this. You put it that structurally looks like what we get. So we still could get a push back up to these demand zones. Pretty good. Wait a second. I think I have my demand zones off. Sure. Yep, we did. Kirk didn't like the color. But basically that's a short term, right? A weekly and a monthly bands. Okay. So we have a hell of a lot of resistance. We're not anywhere near the resistance. I mean, we are below the monthly demand zone. So it's broken. That means this is open for me. I can't imagine it going down to, they're going to split, on these ETFs, they will do a split to bring the price back up. So it'll be like a 10-to-1 split to get it back above, or a 30-to-1 split or whatever, to get it back into the range. They're longer term. Any of those type of ETFs that are trying to, get the underlying of specific instruments, they're going to play games with it. But let me go look at another. Let's look at energy. Energy doesn't look bad considering we're below the primary break. Okay, our primary demand zone is a little below us. So we got this demand zone down at about 65 to 60. If we're going into a recession, and it turns into a global recession, that's where it was. XOE. And right now it's holding up good. This is good. Not a huge seller exhaustion in the wick. Right to a solid demand zone. Bounce. Didn't take this out. If it gets above that though, then I would be interested in chasing equality here. Back up around here. Right there. Right? Which is actually a decent move. It'll be a move back up to $90. So, we could get that. Oil's doing well. All right. Let's go look at something else. Now, notice that candle. That's why equities rally the last 2 days or a contributing factor. And right now gold implies that this move is going to continue. There is no more fear coming into the market like here. But at the same time, we haven't taken 50% of that candle out yet too. So just my 2 cents. Emerging markets. Doing a decent job rallying. I think equality is a game. Realize they're so oversold. Like I said earlier this morning, it implies there's a trade deal. So yeah, I don't really want to, some cash secured puts, I wouldn't go out 90 days. If it pays dividend, it might be worth looking at as a place to park. Then I wanted to look at XRK. And we are just so oversold here. 50% back is at $53 from where we are now. I actually like that one. There might be some safety there. And we have divergence on this low on the weekly. Because ARKK might be a decent shot. We had a nice gap up, solid $4 up too. That was a nice gap. $53 is pretty solid right here on ARKK. I would have rather bought it down here though. But I think it's going to it'll probably test this. That's where there's a little resistance at 52.73, but not much. Actually, that doesn't look bad. Okay, let's go and address Monster last week. Everybody see that? I absolutely hate it when I nail the entry, I'm not in that sucker. And the only reason is fangs aren't green. I want to add it. Not enough of a pullback for me at 303. And where are we now? At 348. Okay, I'm less than happy about it. Less. But my point is the setup worked. All that matters. All right, let's look at block. That was from the prior week. He's just gone. Once we got the breakout, it hasn't looked back either. Russell's not quite as aggressive, but again, gapped, hasn't really looked back either. So that worked. Now, Taiwan, I do not have a position on that, and I'm questioning why I don't this morning, but that's where it is. My conviction builds on a breakout above 160. Then I'm looking for, just throw it up here on the chart. Out of the semis, the only thing I don't like is that SOXL chart. But if we measure the entire leg, right, and realize there's 2 ways. It's stair step, okay? Each step is different. So step, 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 okay? So if this is the entire wave, so this is our A, right, B, and C, there's 2 different, there's 3 ways you can measure. You can measure the cycle, low, cycle high, cycle low, and that'll give you a different fib ratio. Actually, let me just put that up as long as So I wish I could just click on one button and change it pretty quick, but it doesn't work that way. Sorry for the small text. For some reason, it didn't save my larger text, and I have to change each one of those boxes, so it'll take me 20 minutes, so we're not doing it. 50% backs up at $180 was my point. So very viable shot here from this whole leg if we're going to recover, right? In some ways. And I think they recover. Realize there's a headwind in all semis right now because of the strict restrictions into China, and the assumption is it's going to hit it. I don't know. I don't know how real that is. I don't know how feasible that is because, to be candid with you, the biggest driver for tech has been China. So at some point, I think Trump caved, but he might not. He's a stubborn guy. All right. We get into this gap right here. Here's your stop. When it gets below 155 again, then we're probably continuing down lower. And this is a weird shape to it because visually, the way I see it, there are these, I don't know what you want to call them. They're impulse legs, but they're a pain in the butt because they're awful hard to see. But you get this real shallow one, right? Like that, real shallow one. A really deep 3, right? A broad, and it's still equal, and then it comes down, it levels out. Ultimately, 5 is equal to 1, right? And that's what this looks like. So I'm thinking that's 1, this is 3, okay, and then 5 comes down here. That's just what it looks like at the moment. But from multiple other technical looks to this, I mean, we're flagging here. So the breakout, what confirms the move back to the highs is 160. All right, let's look at TLT. I was really disappointed where this came off today. I mean, because it just wicked right the heck off. Man, I mean, just, I don't know what's going on. This is one thing, it's my nemesis. I've lost a lot of times with it. I've actually done, I shouldn't say it. I'm higher than 60% on TLT and treasuries. I just took one of my largest hits in my trading career in treasuries, so I don't like it. For that reason. There's plenty of other things that trade well for me that I've not taken a hit on that I would rather trade. That's it. We'll leave it there. All right, let's look at GitLabs, which was in last week's swing trade notes. I mean, it's worked at this point. We got this morning, right, which is a nice move from where we noted it around 41, $2. Not a great winner, but hey, the main point is it's got a lot of room back to the upside. Really, the confirmation of the move comes in at 47. So let's just put up a regular fib tool and measure 1. 1 is going to come in roughly 50% back, is about $45. If we measure the entire leg, it's going to come in around $56. So it's got some nice upside for a small stock, and it's oversold enough where there's really not a lot of risk, and look at the way our RSI structure looks. So we have a confirmed low, wick off, right? Let me just tell you where I build my conviction. Wick off. So we had seller exhaust extreme, came back in, tested the lows. Then we had the buyers come in. Buyers followed, but sold off. Buyers continued it again. We quit. That was on tariff news. So that was last week. So that explains that. But look at these. So when the market catches a bid, who else is going to catch a bid? So, I think that 50%, 56 is viable. That's my 2 cents. All right, we took a long on PayPal, and it's smoking me right now. I mean, we wicked off. It's rejected. Gets below that gap. I'll close it out, walk away at $61 next. All right, KRE, we're still holding. I'm just building that position. I'm going to roll. I've already decided I'm keeping a position on because I want that. I mean, and the main reason is this market breaks up from a systemic risk crisis at the banking sector. We're going back to the Great Recession lows or, or the COVID lows. And it's not going to be a long, unless you're the perfect stock picker guy, right? It is going to be very hard to make any money. So if it takes a dump like that, I just want to get paid. I got a couple bucks on it, nothing big. It'll give me a payday. If I want to take the next of the month off or the next quarter, fine. Next, we'll wait until the market gets in the right direction where it's tradable. If I don't have my setups anymore, I don't want to take them. That's really what it is. Now, the next thing that we have open are VIC, and we're getting smoked on those a little bit. But again, I don't have that. I think I have 7 contracts, even though they were expensive. But again, I'm keeping those on for the same reason I have KRE. I don't think this is done. That's my so I'm looking maximum. I'm not going to scale yet. I'm not adding because I'm unsure how these buybacks are going to affect the market. That's the main thing. And we're in earnings, prime earnings. So we have to see how the Mag 7 does. But I can tell you right now, the Mag 7 probably is not, I think we're going to see a lot like this, where they can't give decent guidance, so they don't give guidance. So I expect at least one more big name. And it depends on how bad that is with some of those names before, it really hits us. But that's my 2 cents, folks. Great trading. Until next time.